Hi everyone, I welcome you all on my YouTube channel Interview Preparation with Dolly Kumari, where I post videos related to R2R, P2P, financial analyst, investment banking, and US taxation. So, if you are preparing for any of these profile, please subscribe to my channel. And before any further ado, I will start today's topic, that is related to investment banking interview preparation. So if you are going to have your interview in investment banking in coming days or any day, so this video is for you. And in the end of the video, I will also tell you my experience for this role. And so I'll start with the first question, that is, what is price earning ratio, that is also known as P ratio. So the P ratio is compares a stock price to its earning per share. So whatever is the stock price, it compares to the earning which we are having from that share. So it helps the investors to determine if a stock is overvalued or undervalued. So if you have ever invested money in stock market, so you will know this uh, P ratio. But if you haven't, so the theory is that the stock price and its earning per ratio, when we compare both of them, so that becomes our P ratio. And it helps the investors and to determine whether their stock is undervalued or overvalued. Now comes the second question, what is good P ratio? So a good P ratio varies industry by industry, but generally a lower P ratio indicates undervaluation while a higher P ratio indicates overvaluation. So it's good to, like, in my point of view, having a good P ratio will help the investor to earn more on the share which they have invested. So having a good higher P ratio will be helpful and it will be good. Now comes third question, what is debt to equity ratio? So the debt to equity ratio compares a company's total debt to its total shareholder equity, indicating its leverages and financial risk. Now comes fourth question, which is corresponding to the third question. What is a good debt to equity ratio? So a good debt to equity ratio varies by industry, but generally a lower ratio indicates lower leverage and financial risk. Now comes fifth question. What is return on equity? So ROE, that is also known as return on equity, measures a company's net income as a percentage of its shareholder equity, indicating its profitability. So these are the questions which has come so far. And if you are watching this video till now, so you must be knowing that these are basically related to the ratios. So we have different kind of ratio in accounting. And basically while you are going for investment banking question, they will be focusing more on the core financing part. And core one of the core financing part is the ratio really helps investors or other stakeholders to determine the company's position in an easy manner without looking all the financial aspect of it. Like, so if you are aiming for this role, you should have a good understanding of the different kind of ratios. So that is the one suggestion I will give you. Now we will discuss the sixth question, what is a good ROE? So a good ROE varies by industry, but generally a higher ROE indicates higher profitability. So it's good to have a higher ROE. Now comes seventh, what is current ratio? So it is a really general question and it is important yet general. So you should prepare this one. The current ratio compares a company's current asset to its current liability, indicating its ability to meet short term obligations. So it is very important for a company to meet their short term obligations. So this ratio really helps in companies operations. Now comes eighth question, what is a good current ratio? So having a higher current ratio will really help your company to meet up with the obligation. So a higher current ratio will be good for the company. So this is the answer for that. Now comes ninth, what is interest coverage ratio? So the interest coverage ratio measures a company's ability to pay its interest expenses on its debt. Now comes 10th question, what is good interest coverage ratio? So a good interest coverage ratio is generally considered to be 3 or higher. So if you have 3 or higher interest coverage ratio, that will be good for you. Now comes 11th question, what is asset turnover? So asset turnover measures a company's sales as a percentage of its total assets, indicating its asset utilization efficiency. Now comes 12th question, what is a good asset turnover ratio? So a good asset turnover ratio varies by industry, but generally a higher ratio indicates higher efficiency. Now comes 13th question, what is a gross margin ratio? So a gross margin ratio measures a company's gross profit as a percentage of its sales, indicating its pricing strategy and a cost structure. So it really helps in the setting up the price of the product and also setting with the what we going to have the cost. So this gross margin ratio really helps in that. Now comes 14th question, what is a good gross margin ratio? So good gross margin ratio varies, but generally a higher indicates higher profitability. So it's always to have a higher side, but sometimes as per the industry it may vary. Now comes 15th question, that what is dividend yield? So dividend yield measures the ratio of the company's annual dividend payment to its stock price. So before I go any further, I will share one my experience of investment banking role. So 2 years back, I applied for this investment banking role, and where they have asked me the question on the first round of the interview, that what is financial statement. So that is really important. So if you are going for investment banking role, I would like to suggest you to please read the financial statement. It will be good if you read for that specific company, but you should know what is financial statement. And the next question they have asked me, that how many types of financial statements are there? So I already knew it, so I told them. And it's always good to give the extra answer, I would say, and not to restrict ourselves. If you know, like, there are three types of it, and if you know there is notes to accounts as well, so please tell them that I know this as well, and explain them that why do you think this is also important. So be confident while giving the interview, and always read the respective companies' finances, like their annual statement, and so that will be really helpful, and they will know that you are really interested for this role. You are not there just for like, you are not there just, but you are really looking forward to joining their company. So show the your I would say participation by preparing yourself in a good manner. And this third question they have asked me, like, what is current ratio? So this is a very you people think that this question is not so important, but trust me, this is important, because a company cannot run without current assets or current liability. So this is really important. An interviewer wants to know whether you know the basics or not. So it's always good to prepare yourself. And so these are the questions which in investment banking they might ask you, and I have told you some extra questions that you can prepare. So I hope you like this video, and thank you so much for watching. If you have any questions, please write to me in comment box. I will try to answer all your questions. And happy learning. Thank you.